Okay, welcome guys. Um, Not a lot has really happened over the last week. Been a pretty stagnant time in the markets at the moment, uh, especially on the currency front. We've seen some pretty low volumes and some fairly directionless trade. So if we just look at some of the data events over the last week, we'll jump back in time and see what's come out. So in the States, over last week especially, it was fairly quiet. We did have some manufacturing indexes and some PMIs and things, but as a whole, there wasn't a lot. There wasn't a lot on that front. One of the major ones was probably jobless claims that came out last Thursday. It was a little bit higher than expected, which has been pretty stubborn as late. And we did have the GDP, which that actually hasn't come out yet. But so, yeah, I mean, if we look ahead to this week, Monday onwards, we've got home sales, not much of a huge bearer on the market these days. Mortgage numbers, durable goods claims, jobless claims, and GDP. So GDP will be the big one. So that's tipped to be 2%. So we'll see what that comes in as. And then there's spending data on Friday as well. So that's really all from around the world. On Friday, we do have the BOJ in Japan coming out with their monetary policy statement, and in Australia, there's the CPI, quarterly CPI coming out Wednesday. So we'll wait to see what happens there. But I mean, if we look to the markets, not a whole heap's been happening. So we can see the S&P, it's still gradually rising. It's making good progress, and we're seeing it break through these sort of, well, not break through, but we're seeing it test these sort of resistant levels. Hasn't managed to stay above, but it's up there and it's thereabouts. But yeah, as you can see, over the last sort of few days, it's just been grinding along. So we'll wait and see. We're in the thick of earnings season at the moment, and we've had some pretty good numbers come out. I think 90% of earnings have beat estimates. So it's quite a decent result so far. But that being said, a lot of the estimates were downgraded and did have pretty low estimates in the first place. So yeah, that's one sort of contrary point to the results we've been seeing. So the US dollar, like what I mentioned earlier before on the currency front, that sort of epitomizes it there. This sort of grinding, this grinding sort of range-bound trade that's been occurring over the last sort of week or two, really. It hasn't really gone anywhere. I mean, you can look at this and think it's consolidating. I mean, it could break down lower. But yeah, I mean, it's faring up around this 100 support level is faring pretty nicely. I mean, we did drop through it, but it looked to be a bit of a pump fake, and it quickly jumped back through there again, and it's holding here now today, but we'll wait and see what happens there. But held up quite nicely here and jumped back up to the 102 mark. But yeah, look, it's really at the moment, I think this sort of price action is really just reflecting the little array of data and events we've had so far. Oil, on the other hand, pretty volatile movements. We saw this big move after the OPEC announcement, and then we saw some technical factors facilitate a rally back up here, which was after that OPEC wanting to cut wanting to cut production. But since then, it's slipped further off the back of growing economic growth concerns, and it's down around the $77 a barrel mark. So we're sort of, it is a tricky one to sort of get a gauge on oil. It's hard to draw too much technical analysis to it. It does trade in quite hefty ranges, but yeah, look, I'm reluctant to make a call on oil at the moment. As you know, we've got so many varying factors, including a cartel that dictates the price, and yeah, I mean, cyclically, it's tricky, especially with some of the headwinds that it will be facing if there is an economic downturn. And then last of all, we're just going to look at the US 2-year Treasury bond yield. So sitting at 4.15%, been clunky. It's really hasn't gone far since we saw that huge rally in bonds after the banking crisis sort of last month or two ago. But it's up at the top of the range now, and it's sitting up at around the 4.2% mark. Looked as though that the lower levels have been repriced, and I think there is going to be one or two more hikes left in the Fed, and the bond yield certainly reflects that. Some of the pricing we've seen in swaps markets. So yeah, I think 4.2% is it's a pretty reflective yield, especially over the 2-year horizon. And yeah, I think where it is now, it's at a pretty a relatively fair value. So that's really all on the sort of medium to long term front, or medium front anyway. Commodities have been struggling, as you can see down here. We've had huge losses in iron ore. They're down to levels we haven't seen since December 22. Growth is drying up in China. Those fiscal measures, those fiscal stimuluses we've seen in China, are starting to dry up, and the property sector is still waning there. So yeah, this to the last couple of days, iron ore has just been dumped. So yeah, that's a result of growth concerns as well. But yeah, I mean, and then if you go and look at some of the other charts from, so let's try and change my share. Yeah, and then we look at sort of what's been happening today on the markets. ASX was pretty flat. We've got the S&P's opened up, flattish. It's in the green, but pretty muted move so far. Futures are down. Look at the Hang Seng today. It was down sort of 0.5%. Following on from a pretty dull session on Wall Street on Friday. The Nikkei up 1/3%. So yeah, hard to really get a gauge on the Asian markets today. The Kospi was down. And then Treasury yields, they slumped a little. They're down the start of US and European trade now, so they're down 3 to 5 basis points. Aussie yields today were fairly flat, not a lot to report there, down a little. And then currencies, Aussie dollar lagging due to those moves in iron ore. It's pretty heavily correlated commodity currency, so the Aussie dollar's down 0.2% there. The yen's reversed and it's lost quite a bit of ground. However, the euro and is performing quite well. So mixed on the currency front though. So yeah, look, that's about it. It's going to be interesting. The Fed blackout period at the moment, there's not a lot of data really coming. So I think over the next week or two, we'll probably see these same sort of price action around the markets. I wouldn't expect to see too much volatility, but this is markets and they can be an unpredictable beast. So thank you all for tuning in, and we'll touch base again next time.